Welcome to the new Camtasia Studio. We encourage you to watch and play with this Getting Started project video to learn some of the most important concepts of using the editor. If you want more in-depth tutorials that will walk you through the entire process of recording, editing, and sharing your videos, then please watch the Getting Started tutorials using this link under the Help menu. The editor is divided up into three main areas: the clip bin, the timeline, and the canvas. The canvas is where you see your video during playback and can move, resize, and reposition all media however you want. The timeline is where you assemble and edit your video. At the top of the timeline, tick marks represent time in terms of minutes and seconds. When building a video, you'll work in a horizontal manner, beginning from the left and moving sequentially through time toward the right. The tracks are layered on top of each other, so media you add on higher tracks is viewed on top of media on lower tracks in the canvas. For example, this callout is placed on top of the video track on the timeline, and therefore is on top of the screen video on the canvas. If I drag the video track on top of the callout on the timeline, the callout is now hidden behind the video on the canvas. Use the zoom slider to magnify the view of the timeline. This is very helpful when making precise cuts and selections, like removing ums in your audio. New media can be dragged and dropped on an existing track, or a new track is automatically created when media is dropped at this location at the top of the timeline. To change the position of a clip on the timeline, just drag it. To change the duration of a clip, drag the edges in either direction. An important part of the timeline is the playhead. To view your video, click play. Notice how the video and the timeline's playhead stay in sync. Click anywhere along the timeline and the playhead moves to that point. To remove a portion of your video, make a selection with the green in point and red out point. Then click the cut button. If you don't want media cut on a specific track, just click the lock icon. If you make a mistake while editing, press Ctrl-Z on the keyboard to undo, or choose Edit Undo. Double-click the playhead to deselect. Next, we'll look at the clip bin in the library. The clip bin holds recordings, audio files, images, and title slides being used in the project you're currently working on.
Good morning, this is Graham Bibby here, and it's the 5th of September 2014, and it's time for a weekly global roundup. As usual, I'm going to take you through some interesting charts that I see across the globe. On the computer screen now
you'll find a lot more music, call-outs, and
my
animated titles
around
to
here
use in your
pointing to the
projects.
Dow Jones
And
Industrials.
it's all free.
And I just want to point out, because I've got a few queries why we've moved so heavily into cash 3 times this year, and at least 2 of those periods are quite evident, I believe, on this chart. Because what we do is we are looking for markets and stocks and funds, ETFs, that are in positive uptrends, and we follow those with our strategically placed stop loss points to protect capital. And when markets turn down and go below those strategic stop losses, we then move to the safety of cash. And the whole reason for that is we want to play in the game, the ultimate business game, the ultimate business, as I see it. It's the world of the stock market, because, as I keep reiterating, anytime you can be a partner in any of the stocks you invest in, if you buy shares in Facebook, you're effectively a partner, and you can stay in that partnership as long as you want, and then when you don't want to be in it, you just sell the stock. You have no overheads, you have no running staff, you have no premises to pay, but you can join in the favor of that stock. Indices, like the Dow Jones Industrials, are a broad base of a certain number of stocks, and this being the Dow Jones 30 is the top 30 stocks, or big 30 stocks that are in that index. So it's kind of representative of the market, and if you add that to the S&P 500 and the NASDAQ, well, certainly you've got the overall trend of the market, and ideally you want to go with the overall trend, because otherwise it's like a current. Let's imagine swimming up a river. If the current of the overall market is going down and you're trying to swim up, it's a lot more difficult. and eventually
These
you get
features are
tired,
available when
stocks
hosting
get
your video
tired,
on
and they get washed away by the overall market.
or the video
So the Dow Jones
player on your
Industrials
own
is
web
beginning
server.
of 2014
This player
broke
provides
below
playback on multiple
the
devices
support
with just one
levels
video,
quite
it's a phone,
significantly
tablet,
to down to
laptop,
these
or
support
desktop
levels.
computer.
So that was a
Well, it's
downtrend,
time for you to
and
try
in that
Camtasia
period,
Studio for yourself,
a
using
number
the
of
content
stocks,
on the
roughly
timeline,
around
or better
50%,
yet, create your own.
followed in
We
that
have lots of free
downtrend
tutorials
and
on our
actually broke
website,
stops
and
and
I
we went to
recommend you
cash.
begin with the Getting Started
This happened
series.
again. You can't see it so
Also,
much
the
here
help file
in
inside
April,
Camtasia
but you
Studio
will on
tells you how
certain
to use
individual
each of the
stocks.
Camtasia Studio features
And sadly, it
applications.
happened again in July.
One
Why I
last
say
thing.
sadly,
If
because
you
what's
ever want to
annoying
open this
is
Getting Started
these
project
trends
again
didn't
to
follow
use or
through,
practice with,
and then they
use this
reversed to
link
the
here.
upside, but not for
Thanks
long
for
enough,
watching, and we hope you
because
enjoy
we don't get a
Camtasia
new
Studio.
buy at the bottom, we get a new buy once the uptrend started. So we have found that we're roughly flat for the year. Now, what I would say to investors is, following our first few years of the Insiders Club, in its current format with the stock selection and the Insiders Club FOSS, given the longer term track record, I think in difficult years, if we're flat, that's not too bad. But as I've been saying, I expect the second half of the year will be where most of the returns for the year are captured. So I'm still looking for that to happen, because I've got great undervalued stocks with superior earnings. Some are the best I've ever seen. So at some stage they will mightily outperform. Anyway, let's get back to the index. We were breaking down here where that circle is in July, and now we've reversed that. We're in an uptrend. We really need to break above these highs, and we're trying to do that. The Nasdaq is tech driven. It's more growth orientated stocks. Again, you can see the downtrend in January. You can see more clearly the downtrend, which was March until April for this index, and you can't see so much this downtrend which happened from June to July, but you can see we have broken clearly above the previous tops, which are 4,500, and this looks to be in a positive uptrend. And then lastly, the S&P 500, which is very broad based. Again, here is the downtrend, which is called the move to cash, and some negativity in returns in January. Here is the downturn in March and April, negativity, move to cash, and here is the recent one in July and August, which caused us to move to cash, and then we had to regain. So that's the overall index. We've got some of our great looking stocks. This shows you the huge correction here in March to April for Facebook, and I really like that company. I really like that stock. We've moved back in it following that correction, and we're very near the new highs at the moment, so that stock is looking really good. Skyworks Solutions never joined in really much of the correction, except here in March-April time. Apart from that, there were stop losses here, stop losses here, stop losses here, and stop losses here. And the market 2 days ago hit a new high. We've corrected back to just around the 55 mark, and I certainly expect that to start moving up again. Now, looking further afield, you may have noted that last night in Europe they've decided to follow the US lead of stimulus, and in fact they've cut interest rates, and they really needed to do it because this is a German stock market, and it's had the same volatility in January, it's had its volatility in March, and then in June and July it started the correction, and that hasn't really, or didn't really stop. And this is more significant than the worst of the markets, of the other markets, the US, because it was over 32 and it went down to 28, which is about a 16% correction. We broke all support levels, so we really need, this shows us that that market does need some stimulus, and it's a market that we'll be watching closely for our fund optimization service, which is where we invest in exchange traded funds, because this may be the new a new growth area. But certainly I feel it must be good news for the markets overall, because if Europe's trying to be stimulating now, it may be another engine's going to fire up. Now, looking further afield, Asia, we don't invest in individual stocks in Asia at this point in time for our Insiders Club, because we have enough stock selection in the US. But for our Insiders Club Fund Optimization Service, FOS, which was reintroduced a few months ago, we do give buy and sell signals in this market. And the track record from 2002 to 2010, which included the global financial crisis and the end of the tech bubble bursting, if you followed that strategy, you would have made over 380% when the world index only went up 37%. So, I've got a really good track record of doing this. Exchange traded funds are listed on the stock market. They make it easy to invest globally and in sectors. But this is interesting, and I mentioned this before. This is the Asia ex-Japan index. This is an exchange traded fund. This is 2013 through to the middle of this year, and we've been in this huge range, and we broke to the upside. And I said normally when you break out of a range, either up or down, you get a significant move in that direction, and we're certainly looking strong in our holding in AAXJ, which is the iShares Asia ex-Japan. Recently, I mentioned in January that Thailand, I mentioned it on Bloomberg, was one of the places to invest, because in the previous year, which is where this arrow is, in May, the ETF had gone from 95 to 60. So there was a big washout of that market, and then of course you had the political unrest, but the market bottomed here, and the next bottom was here. It was at a higher level. The trend reversed in the market. So there was an army, there was the coup, there's all sorts of negative potential happening in Thailand, but the market has started to go up, and that meant all the weak players had got out of the market. So the market started to go up, and we've been in this positive uptrend ever since. We did come out here during this sell-off phase in July, but then we recognized a new uptrend, and we're back into Thailand. This is a bit of a way from where we're normally looking, but I have mentioned the commodities index before, and this is showing me, let's just turn this to weekly because I think it's a bit clearer. This downtrend had been broken beginning of this year into an uptrend. However, that uptrend ceased here, like this. So in June, or sorry, into July, the trend in the Commodities Research Bureau Index, which is a basket of commodities, reversed and has been in a downtrend since. So that's not inflationary. That's the opposite of inflationary if commodity prices are falling. So I think there was definitely a need for stimulus in order to get global markets going. Another area that I've been talking about is the dollar, because it broke out of this trading range. 81 to 79 was the range. It's 83.80 now. It is quite strong, very strong in fact. Against all odds, the US dollar index is rising. And I just want to cap off with the motherland, China. I had told FOSS clients and prospective clients that the Shanghai market hasn't made any money for 12 years. And then we broke out of this downtrend in July, and this is the market hit a new high yesterday. And our access to it was through Yin Direction Daily China Fund, and you can see here the breakout happened here. There was another breakout and support here, but we've been in this very strong uptrend. Bit of a correction was going on in August, but the uptrend was still intact, and we've hit a new high last night. So overall, markets are still looking good. The US looks a bit tired, but we've got some great stocks. We're still following them very, very, very well. A lot of opportunity in the Insiders Club FOS. I really reintroduced that on the back of one of my clients requesting it, and I think it is a good addition to the Insiders Club, which is undervalued stocks with superior earnings, buying in uptrends when the trends turn up, following those uptrends with strategically placed stop losses, and then if the stock moves into a downtrend, however long or short that may be, we will exit through stop losses and protect. So we're playing in the game, the ultimate game. We've got stocks all in our list that are superior stocks, but we use stop losses to protect. And the FOS service is really looking at global markets, giving you the opportunity to invest across the globe and in individual sectors like semiconductors, banks, energy. If they're in uptrends, if that's where the money's going, we're following them. We use diversification to reduce that risk and volatility. So all is good. I'd like to see a really strong end to the year, so fingers crossed on that. I've always got my eye on the markets and my hand on the tiller. So until next time, wishing you a great weekend, and look forward to coming back to you again next week.